What if luxury home ownership in Orange County was more attainable than you thought? At Skyline OC, Orange County's tallest residential tower, you can own a designer-finished residence with resort-style amenities, breathtaking panoramic views, and a lifestyle designed for how you live, work, and invest. Whether you're building wealth through real estate or searching for your next home, Skyline OC offers exceptional value in the heart of Orange County with condos from the 600s to $3 million. Visit SkylineOCResidences.com and discover why now is the perfect time to own at Skyline OC. One of the biggest mistakes of my entire career could have been completely avoided. It caused a lot of pain and stress and sleepless nights, a lot of lost money and capital. And if you're somebody that is ever going to raise money, which if you have big goals, big dreams, you're only able to bootstrap for so long. So you have to look at outside capital, whether it's for your business, whether it's for a real estate deal. And there is a very clear and concise lesson that can help save you a lot of pain and also help you win massively with your investors. And in today's episode, I'm going to break down the 7 questions that I ask an investor before I ever take on their capital so you can avoid this mistake too. I've raised money for a lot of deals over the years, tens of millions of dollars in different real estate investment opportunities in my business. And while I have had an overwhelmingly positive experience with all of them, the one that stands out was the most painful. And it led to a very long partnership dispute, a very costly partnership dispute, not only financially, but there was a friendship involved. There was businesses and assets involved. There was employees involved that dispute all impacted. And when I was looking back and reflecting on the lessons, the face plants, the things that could have been avoided, it really helped me narrow down a framework, really 7 questions that I now ask every investor before I ever decide to take their capital. And I hope that these can help you on your capital raising journey as well, because that pain, it can be avoided. But just like capital partners are doing due diligence and interviewing and getting to understand you and what you bring to the table and the alignment they feel with the goals they're trying to achieve with their money, you equally should be doing that same level of due diligence on them. An early mentor told me just because somebody is willing to give you money doesn't mean that you should take it. And I learned that lesson the hard way. And so by asking these 7 questions, it can help you find the alignment, identify the red flags, and determine whether or not you want to take someone's capital and bring them into your investment or bring them into your business to avoid a lot of the pain and heartache that a lot of people end up experiencing when dealing with outside investors. You know, most content that I see about capital raising focuses on how investors should be evaluating deals, how they should be pitching and presenting deals. But I don't see many people talking about how operators or business owners, the people who are raising the capital, should actually be evaluating and interviewing and understanding the investors or the groups that they are looking to take capital from. And I spend equally as much time as I do in thinking about how to present and structure a deal and the alignment and suitability with potential investors as I do actually underwriting the person who's willing and able to stroke the check. So here are the 7 questions I ask every potential investor before ever allowing them to wire me $1. Hey, what's up, guys? I'm so excited to announce if you are an investor looking to generate consistent passive income, then I've got something for you. I just launched the Imagos Income Fund. It is a private investment debt fund. So instead of relying on long-term appreciation or big exit events like most real estate syndications do, we decided to keep it simple, focused on first position asset-backed lending just like a bank, meaning your investment is backed by real collateral and structured to produce income from day one. The target return, 10% paid out annually, and also paid out monthly. So no guesswork, real passive returns, true mailbox money. And because we're in the debt position, not equity, we're able to prioritize downside protection, maintain shorter durations, and stay in control of the risk, which is most important in environments like this. This is built for investors who want steady cash flow, strong capital preservation, and real asset exposure without the headaches of owning, managing, and waiting years for a payoff. So if this resonates with you, if you want to learn more, I put together a full investor presentation breaking everything down. All you got to do is just text the word income to 844-447-1555. That's income to 844-447-1555. I'll send you everything so you can see if it's a fit for your portfolio. Number one, you want to understand what their timeline is. This is the single most important question. Do you need your money back quick? Are you patient capital? Understanding their expectations around how long they're willing to leave their capital in an opportunity with you can prevent a lot of pain and a lot of heartache. An investor who told me early that he had a 10-year horizon asked for his money back in like 9 months. And he said that he needed the liquidity for something else and that something shifted. And if someone says that they have a long timeline, I ask, what would change that? Is there any scenario or circumstance that would require you needing this money back? Or is this money that you can part with for a long period of time? Family situations, job loss, another investment opportunity. A lot of limited partners or investors have never stress tested their liquidity needs. And so getting really clear and understanding what are their capital reserves, how much of this capital that you are giving me is, a part of your overall liquidity and portfolio, because that can help you understand, are they parting with money that is live on money? Are they parting with money that is money that they're not even thinking about for the next decade and they got plenty of income coming in elsewhere? Very, very important to understand this. Number two, where is the capital coming from? I need to know if this cash is sitting in a brokerage account. Is it a home equity line of credit? Is this coming from retirement funds? Or is this money that you can't afford to lose that's been sitting in your savings account that you just want to get a little bit of a return on? This determines their ultimate risk profile and likely how often they're going to be calling for updates. You can understand based on the different vehicles people invest out of, their sophistication and their level of needs and requirements of what that vehicle it's coming out of is generally used for. So understanding where the capital is coming from can help give you a little bit more of a data point around this overall investor. Number three is, have you invested in this asset class before? First-time investors require a lot more communication, a lot more hand-holding. They have a lot more questions, which is totally fine. But at the end of the day, you want to understand and know that in advance, so that way you can solve for that problem. You can over-communicate things. You can set proper expectations on the front end. You can set up certain automations or systems that help satisfy those needs. But understanding their level of comfort, their risk tolerance, their timeline, these are important things that can help you build an overall better profile of that investor and what their expectations are when they're making that investment with you. Someone who has seen and been in, a development deal before and understands construction timelines and understands some of the challenges that might come up, or understands the overall roadblocks and hurdles that often present themselves in that type of investment, are going to be a lot more understanding and comfortable investing in it again versus somebody who's never been involved in a development deal ever and understands the risk that comes in development. So understanding the investment class and have they invested in it before, very, very important. Someone in the space for the first time is going to need a lot more hand-holding than those that have been more seasoned and around the block and understand what potential things can come up. Number four is, how involved do you want to be? This is an important one. I learned this the hard way. The person that I ended up in a dispute with said that they wanted to be 100% passive. They were going to let me do everything. They were going to stay out of the way. And that ended up being the complete opposite scenario. They tried to get in to every aspect of the business. They tried to make every decision. And because they wrote a big check, they thought that they had the authority to do that. So understanding this person and based on their check size, how involved do they want to be? Some investors want quarterly updates and they want nothing else, and they are happy to hear from you 4 times a year. And those are my favorite, by the way, but they don't want to be involved whatsoever. They want to be hands off. They want to be passive, and they want to trust that they're putting their money with somebody who can steward and shepherd it and protect it in the right way. Others maybe want to be a little bit more involved. Maybe they want to visit the job site. Maybe they want pictures or videos, and they want to just be a little bit in the loop and be engaged in some capacity, which is fine too. And you can set up the right expectations and systems for that. The one that I can't work with is the person that wants to be the driver and the decision maker in the deal. Because at the end of the day, if they really want to be that person, that needs to be the investor that goes out and is the hands-on operator themselves, not the passive investor, which is generally who I work with. So understanding your investor's involvement, desires, and perspective is something that's really important before you ever take a dollar from them. Let's take a quick break and hear from today's show sponsor. What if luxury home ownership in Orange County was more attainable than you thought? At Skyline OC, Orange County's tallest residential tower, you can own a designer-finished residence with resort-style amenities, breathtaking panoramic views, and a lifestyle designed for how you live, work, and invest. Whether you're building wealth through real estate or searching for your next home, Skyline OC offers exceptional value in the heart of Orange County with condos from the 600s to $3 million. Visit SkylineOCResidences.com and discover why now is the perfect time to own at Skyline OC. 5, how does a bad outcome look like to you? This is a really important one, and I think it catches, some people off guard because a lot of investors focus the conversation on the upside and the positive things and all the potential of a deal. But I want to know their actual pain threshold. I want to know their risk tolerance. I want to understand how they look at and view volatility and when challenges come up and when things don't go as smooth or as, planned. You know, Risk is always associated with investing, and investors that are willing to part with their dollars understand that. But when things get challenging or when things get misaligned with the initial vision or intention, which can happen sometimes, it's not always often, but you ask most syndicators over the last few years, what a bad outcome looks like for their investors, it's happening. It's going on real time. And so knowing what this is for your investors, I think is really, really important because I want to know that pain threshold. And is it breaking even on a deal? Is it I don't hit the returns, but I still get my money back plus a little bit? Is it if worst case scenario happened and I got half my money back? Whatever it is, the more clarity you can get on that, the more context you can get on that, the better. Number 6, do you have an accountant and an attorney who understand real estate or who understand X business or whatever the investment opportunity is? This is generally only for bigger investments and check writers, but you want to know that because I don't want to be the person explaining the K-1s to them or all of their tax implications on every specific scenario that their unique circumstance might be completely different than mine or the next person in the deal. And so you want to know that they've got a good team around them. And guess what? By asking that question, if they don't, you can always refer them to somebody and be of value there and help them get aligned with somebody that can help them with those needs. But something that's really, really important, because you're not a CPA, you're not a tax strategist. You want to defer those questions to those people. And if they don't have that individual in their world, you just want to understand that so that way you can better prepare the conversations and or the relationships that might be necessary to be of value and still suit and meet all of their goals and needs. At the end of the day, when it comes to your investors, you want to know as much as you can about them because you want to be of utmost value to them. And giving them an investment opportunity is only one vertical of value. It's the big one, it's the main tree trunk. But when you think about all of the branches and all the different things that you can learn about your investor and that you can find alignment through, that you can create value through, that you can offer relationships or resources to, all this does is make you look more credible, more authoritative, more of a fiduciary, somebody that they know they can trust. And it ultimately creates the alignment that the investor and the person getting the investment ultimately seek for the most harmonious and beneficial relationship long term. The last one that I ask is, why this deal? Why are you interested in this opportunity? If the answer is, oh, I don't know, it just seems interesting, um, that's not going to be a good answer. But if it's an answer where they give you the comfort level to know that they deeply understand what we are doing, why we are doing it, why they are aligned with the risk profile or the asset class or the opportunity, why they are aligned with us or with me or with you, those are all green lights. Investors who invested because they trust the operator and understand the investment thesis are going to behave completely different during a rough patch or if things don't go according to plan or on timeline than someone who's just invested because they saw the numbers on an investment marketing deck. Two completely different people. And the common thread across every difficult situation that I've experienced when it comes to misalignment with a partner existed way before they ever wired the money. I just wasn't asking the right questions and I wasn't taking the time and the energy to really understand intimately who this person is. You also need to do background checks on them and understand their reputation and their history and get referrals on these individuals. Because guess what? The person that I took a lot of money from and made a lot of money for and ultimately ended up in a challenging parting of the ways. I'll just say I made a lot of money and I was whole and everything worked out for me. I could have made a lot more. And same thing for that person. They made a lot of money and they were made whole, but it was an unfortunate and unnecessary outcome um, because of all those red flags that I didn't do my due diligence in asking all these questions. As I later learned about this person and talked with other people who had taken money from them, guess what? The MO was the same. And there were many similar, almost spot on outcomes that other people who had taken checks from this person experienced as well. And if I would have done better due diligence, I would have asked better questions, I would have talked to more people, um, I would have avoided a lot of that pain. So some good learning lessons, obviously if it doesn't kill you, it's some of the best lessons that you can learn to make you better, stronger, wiser in your future endeavors when you are going into new opportunities and raising money from people. But the best world-class investors are not only great at finding great deals, structuring great deals, and bringing capital to those deals, they are world-class at understanding every single person that is coming into the deal, and that is including the investors and the check writers. Turning capital down is honestly, it hurts my heart. It's one of the hardest things to do. And at the same time, the wrong money will cost you more in time, energy, and reputation than the right money will ever make you. So hopefully that is helpful. As always, know that if there's any questions, comments that you guys have regarding your own real estate or business and entrepreneurial investing journey, shoot me a text at 844-447-1555. I'm always here to connect, always here to support you. And of course, If you are a passive investor that is looking for opportunities and you want to know if we are in alignment on helping you achieve your passive income goals, you can text the word income to 844-447-1555. Until next episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers. Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionairemindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at officialmattia, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.